All right, good morning. Hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, today we got JOLTS, man. JOLTS. Oh my goodness. Oh my goodness. Yep. We have JOLTS. So we'll do a deep dive into the fundamentals and technicals and see what we can see. But JOLTS is not until 10. In about 14 minutes, we have the open of the United States stock market. Yeah. Oh, and we've had some down days. Oh, for sure. So we need to have a plan. First thing you need is good execution partners for your small trading business. Traders Way is an ECN. Let me click over here. Traders Way is an ECN. You want to have an ECN as your execution partner. Cheaper, faster, better. But the thing is, they have a business model based on adding value, providing quality service to your small trading business. If you choose a different type of broker, that means they trade against you and they laugh at you when you lose money. Traders Way, cheers for you. Now, once you have execution, you need good data, don't you? Offense, defense, and good coaching staff, right? Cool. And that's where traders.com comes in. So let's start by getting ourselves updated with news headlines that have come out recently.
Sell-off alert. US dollar Canadian dollar hits resistance, eyeing support levels. Salvage crews head to scene of jet fuel tanker crash off UK. Euro US dollar refreshes 4-month high as greenback slumps on US slowdown fears.
Brazil industrial output stagnates in January. Euro US dollar price forecast. Bulls aiming to test the 1,100 psychological threshold.
United States Red Book Index, year over year, declined to 5.7% in March 7 from previous 6.6%.
U.S. stocks may regain ground following yesterday's sell-off. Greenlanders vote in election dominated by Trump's control pledge. Bay Street likely to open on positive note.
No evidence of foul play in UK ship collision, PM spokesman says.
Cool. So that's the headline. All that stuff has come out in the last half an hour or so. Then you want to check the calendar and you'll see in 38 minutes that we have the JOLTS job openings. Very cool. Okay. And you'll see, oh, well, we used to have about 9,000 jobs open, and right now we're about 7,500,000. And direction is important here because we're trying to figure out is the job market contracting or expanding? And that's important too if you're trying to figure out monetary policy by the Fed. Cool. Now, I can do a deeper dive into this, of course, because we have all this under our fundamental analytics tool at traders.com. But this kind of is the quick and dirty. When you go to the news radar, you can see, does JOLTS matter? Yes, it does. 37 minutes, 18 seconds. All right, so if the news comes out and it's less than 7.6, we can see that there are some scalping opportunities on the dollar pairs. What if it comes out greater than 7.6? There are no real scalping opportunities. Is that good information to know right off the bat? If it's less than, scalp. If it's greater than, don't scalp. Or would you like to guess? Wayne, I'm an avid guesser. Well, having looked at a lot of different JOLTS reports and analyzed whether they came out greater than expected or less than expected, we then looked at does it provide volatility and is there a reliable, repeatable pattern? And well, the reliable, repeatable pattern in greater than expected situations doesn't really exist. Not on the Aussie dollar, not on the pound dollar. There is on the Kiwi dollar. There is on the USD CAD. But you notice that there's no trade at all in euro dollar? What? Yeah. Oh my God. Good to know. But if it's less than expected, scalp on Aussie dollar, scalp on euro dollar, scalp on pound dollar, scalp on Kiwi dollar, scalp on USD CAD, right? Scalp on dollar Swissy, scalp on dollar yen, based on what has happened in the past. Now, past performance does not predict future results. No, no, no. But at least we're not trading blind. Yeah, and so now you got to pick your poison. Now, you might be bullish today on Aussie. So you might say, well, in that case, if it comes out less than expected, I want to buy Aussie anyways. Okay, good. That would confirm. But you're like, well, yeah, maybe it's strong today, but Euro's been stronger in general as money has been leaving the United States stock market and going into the European stock market. Oh, cool. So you're like, well, I'm hot to go HOTTOGO on Euro anyways. So if it comes out less than expected, I already want to buy euro dollar. Well, this won't hurt. So you're like, okay. And then you're like, right, we can draw the following conclusions about the expected movement of euro dollar based on the last 12 JOLTS job opening events in the United States. If the actual is less than 83.3% chance that the 2-hour will be up. Okay, TRADARS, you're so smart. Show me. Okay. February 4th, less than expected, it went up. October 29th, less than expected, it went up. September 4th, less than expected, it went up. June 4th, less than expected, it went up. March 6th, less than expected, went up. How does that make you feel inside? To have that at your fingertips. I feel like a gummy bear. Let's read hundreds of articles and see how we think about Forex today. All right, USD Swiss franc, negative. Okay, just read 12 articles on 3 different websites. Euro dollar, positive. USD yen, negative. Pound yen, negative. Silver, negative. Oh, positive, sorry. Pound dollar, positive. Euro pound, positive. Kiwi dollar, negative. Aussie dollar, neutral. USD CAD, neutral. Gold, neutral. You're like, wait, Wayne, you're going too fast. Okay, let's go to gold. What do you mean neutral? Well, I just read 69 articles on FX Empire, FX Street, and Action Forex. And I understood all 69 articles that were written this week, only this week, in the last 7 days. I understood all 69 articles, and it was inconclusive of what the market is thinking about and writing about. The market used to be positive, then it went negative, and now we're neutral. Okay? And you can see there was a big change. Very bullish to actually bearish to now neutral. Oh, cool. Yeah, it is cool. The thing is, I didn't read the 69 articles. I had AI do it. Read it, understand it, and report back to me. Because I'm the boss, and that's for the fundamental analyst to do the research and then report back to me. I also have a technical analyst that works for me because I'm the boss. And I say things like, hey, technical analyst, I'm interested in euro today. So report back to me Euro Aussie, Euro CAD, Euro Swissy, Euro Pound, Euro Yen, Euro Kiwi, Euro Dollar. And tell me if you see any trend patterns. And then my chart bitch gets out there and does the work for me. Bullish opportunity, bullish opportunity, bullish opportunity, bullish opportunity, bullish opportunity, bullish opportunity, bullish threat, bullish opportunity, bullish opportunity, bullish opportunity, bullish opportunity, breakout, pullback, maybe. Yeah, probably an opportunity later today. Done. I just went through about 7 pairs on 5 time frames, only looking for trend patterns, and just analyzed them, and now done. Now, it's fast because I had somebody else do the work for me before I sat down at my trading desk. So as a boss, I said, I'm interested in buying euro today. And said, hey, analyst, bring me all your charts. Only show me trend trades on euro pairs on 5 time frames. And they're like, here you go, boss. Boom, 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 boom. And I'm like, yep. Maybe. So now I can go to my charts and set it up. Done. Why waste an hour or 2 doing that when you can have automation do it? Why read hundreds of articles when you can have automation do it? Why analyze 12 JOLTS reports, organize all the results, collect charts from every single one of them on multiple time frames, and then try to figure out how to play it when you can just automate the whole process? So let me show you like what I mean by that. If I go back to that news radar, it's a lot of data. Sometimes this page is slow to load. It is a database. All right, I'll give it another click. I'm impatient and I hate waiting. So what I meant was, okay, now it's loading. You go to JOLTS and you say less than expected, okay, which means the economy is slowing down. We have all the pairs on all the time frames. So we have 1, 2, 3, 4, 5, 6, 7 pairs on 1, 2, 3, 4, and 5. So we have 35 charts organized by less than, greater than, or equal to. So 35 times 3, that's over 100. So anyways, 100 charts. You want the exact number? I don't want to do it. All right. So, right, over 100 charts. And then you have to go back 12 months. So it's about 1,500 charts. And then you organize them. Some months were greater than, some were equal to, and then some were as expected. Okay? And then you have to look for vol, and then you have to look for pattern. And then you have to calculate it. And then for every single one of them, take a screenshot. Well, what do I mean by that? So in this case, here's all the screenshots 2 hours before and after the news. Okay? But that's not enough. Take screenshots for 4 hours before and after the news. Then take screenshots of 12 hours before and after the news. And then take screenshots. You get it? We don't have 24 hours just because there's no pattern. So we've already analyzed it. There's no pattern on the 24, but you have to imagine there could have been. And then you go 48 hours before and after. Okay, these are now hourly candles, not 15-minute candles. And it's 2 days before and 2 days after. So you could do all that yourself for free. But then you'd be spending your whole day doing that and not trading. But wouldn't it be nice if you had that data and then you kept it updated for every news event? So today, JOLTS, tomorrow, CPI, the next day, PPI, the next day, UMICH. Oh my God. Well, what about the Canadian interest rate decision? What about, what about everything else? Yeah, all of a sudden, it's a full-time job. So it really depends on what kind of value you put on that. Do you even care about that kind of information? And if you said, yeah, Wayne, that's amazing, then would you? How much would you pay somebody to do that for you? Would it be more than $300 a month? Yeah. Just this. This alone would cost you more than $300 a month. Yep, faux show. Stock market's opening. Is it risk on or risk off today? Well, let's ask dollar traders, yen traders, gold traders, volatility traders, options traders. And who am I missing? Well, let's ask it all. Let's phone call a bunch of friends that are also professional traders. And let's ask them how are they investing today? Now, it'd take a long time to make those phone calls. Oh yeah, I forgot Treasury. That's what I was thinking of. Long-term Treasury and short-term Treasury investors. And then you say, what about today? What about this week? What about this month? And so here you call your options trader friends, your treasury trader friends, gold trader friends, VIX trader friends, yen and dollar friends, hot money friends, and stock traders. Your friends. You call all your friends one at a time. How long does that take? And say, how are you investing your money right now? What about this week? What about this month? How are things changing? And then you organize them into baskets and correlate them. And then you say, oh, look, when you look at the entire market, it's slightly risk off, but nobody's actually that sure. So the market might be crashing and you might feel like it's the end of the world, but that's not how professionals are trading right now. They're not happy, but they're not freaking out either. So if you have that kind of freak out bone in your body, you're probably overdoing it. Now, is it good? No. But is it abnormal? Well, that's the whole thing, right? Oops, wrong one again. I keep doing this. Okay, is it abnormal? Well, we can just look at the S&P 500 and find out it's totally normal. Oh! So you've been prepared.
Yeah, thank you, Emerald. It's like terribly close, but so anyways, check that out. It's totally normal. So you might be freaking out. Your neighbor might be freaking out. Your YouTube guru might be freaking out. But you could have been prepared weeks ago. And then you're also laser focused on, okay, the down is now and it's happening. Great. But when will it stop? When will be my opportunity? So you're already thinking ahead. And everyone else is freaking out because they can't think ahead. They don't have the data. They don't have the experience. They don't have the knowledge. So they're victims. Okay, you're prepared, so you're not a victim. Yeah. You're prepared for the disaster.
So you can wear your hard hat. You're prepared. Danger, danger, danger. Oh, well, I'll be prepared. Yeah. So I am now a member of the Homeland Security FEMA Disaster Emergency Response Team. By definition, I'm prepared. So when people are vulnerable because they're not prepared, I show up to save their butts. Kind of like finance, huh? Yeah. So you need to be the one that people turn to for support and help. You're the one to protect your money and your family's assets, your friends, your loved ones, your neighbor, your community. People need to turn to you and say, oh, you're the money person. Oh, I have a question. What should I do to prepare? What should I do? What should I do? Help me! You're the one people turn to. So you can't be reactive. That must be terrible, to be reactive, to just get crushed and you don't know what's happening. How far is it going to fall? The sky's falling. The sky's falling. Let's take a look at JOLTS. Okay. JOLTS. Our last revision was 8.16. Our last headline was 7.6. So 8.6, 7.6. Ooh la la. What should this number be? David, tell them to go to Goldman Sachs. And they're like, well, I don't have enough money to go to Goldman Sachs. That's why I'm at Edward Jones. And I'm like, well, maybe that's your problem. Yep. Brutal, I know. They are better, actually. Yeah. They would have better products, better internals, better support teams, better funding, more opportunities. Yeah, I think. So anyways, what number should this be? What's our target? Does anybody have a target? If we're somewhere between 7.5 and 8, where do we want JOLTS to go? What's good? Yeah, they're finance guy. Yeah. Well, David, that I would say their guy doesn't know very much is almost always. Yes. Almost always. And now it's even worse. Their guy is a YouTuber. You don't even need to be licensed or registered. You don't have to have an education. You don't have to have decades of experience. You don't need to have been mentored and shown the ropes, and you don't have to have experience from learning from failures. You just have to be entertaining and a good talker. And now you're an expert. Huh. That's terrible. Yeah. 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 Anyways. Nobody knows what this target is, huh? Nobody wants to answer? Well, how do you get that data, Wayne? Well, let's just go back 12 years. And you can see 8, where we are now, 8-ish, 7.5 to 8. Okay, this is where we are now, is not good. Right on, Richard. Yeah. But, these conversations have got me thinking, I run endowments, and then I had to, so that was good, building what I believe is to be a conservative, disciplined, sound portfolio for charity. And then I started the Council of Investment Advisors to teach people how to do this. And so I believe for the charitable work that I'm doing as a financial strategist is good. And then we run our CIA group, and I believe what we do is really, really good. And then I'm involved now with a publicly traded strategy called the Wheel. It's an ETF, and I believe it's really good. Okay? It is performing just like I would expect. Are we losing money on the way down? Well, net asset value, sure, but a lot less than the major indices. Is that what it's designed to do? Yeah. Is it designed to prevent it? No. But is it designed to lose less? Yeah. Well, that's good. My CIA portfolio has beaten the S&P 500 the last 3 months by 3%. Does that mean we're up? No, it means we're getting crushed by the beta, but by a lot less. So I like these things because those portfolios are designed to weather storms, to chop off the top and bottom and be smoother and more reliable and produce income. So I like it. My next thought is, well, what if you want me to manage your retirement account like I basically do for endowments? And I'm seriously considering that. Yeah. Because it's just another opportunity, since there's a lot of mediocrity and David, you're like their guy. My thought is, well, what if I was the guy? never really contemplated that because I don't want to be a wealth manager. I don't want to like do paperwork for your family and have big, long, esoteric, touchy-feely conversations about the future. No, I'll leave that for somebody else. And so what if I had someone else to do that for you? But meanwhile, you can just buy my endowment portfolio for your retirement account. Oh, yeah. So I might be able to do that if you guys were interested. Be your guy. I got my guy. My guy is a YouTube guru. But anyways. So JOLTS is coming up in 15 minutes, and let me show you. What should this be? Well, 7 or 8 is ridiculous. The last time our economy was way out of whack, we skyrocketed to where we are now, 7.5. So what I'm trying to tell you is, in the realm of 12 years, where we are now is ridiculously high. Okay? Oh, thank you, Richard. I appreciate that. So this is ridiculous. This is a sign, like, if the economy has this many jobs available, something is actually wrong. Something is broken. Something is out of balance. And so that we've now recovered. So a lot of people will say, oh my God, we were at 12 million and now we're down to 7 or 8. Things are much better. No, they are not. Okay? No, so the rate of change is now important, but the number is closer to 5 or 6. I'm trying to grab some of these numbers here. Okay? 6, 6, 6, 6, 6, 6, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 4, 4, 4, 4. So over here in 2014, the headline JOLTS was 4. Dude, we're at 8. 10 years ago, we were at 4. Now we're at 8. And you're like, well, that's good. Not if it's fake money that's leading and creating fake jobs, because then that's where inflation comes from. And I had a very serious conversation with our fundamentals group this morning about that topic. Now, of course, we've done all this, so everyone's already seen it. But now the bigger consequences of this, well, if you want to play, you got to pay. Yeah. But I want you to, no matter what, I want you to understand the context of where we are. If you don't understand the map, then me telling you where we are doesn't matter. What's the JOLTS? Oh, it came out 7.8. Oh, is that good or is that bad? Well, it's not 12. That's not an answer. You have to understand the context. Evil, you might be able to get that breakdown from the Fed. Okay, so pull up the Fed and do a search. You might be able to do that regionally. So most of the Fed reports, you can pull up the headline and then you can actually drop a map on it. And so you could then say, show me the JOLTS based on state maps. And you can see by state where the jobs are. So you'll see lots in California and none in Detroit. Michigan, I should say. Okay, California versus Michigan, for example. And maybe by industry, but my my macroeconomic professor at Harvard, he likes JOLTS. And he's a senior economist at the Boston Fed. And we spent 2 days on JOLTS. And not just like, the number. We analyzed the number, we broke it down, and he did have that kind of data. Because what we did was we looked at the type of job, okay? And then we looked at the type of worker. And there was a mismatch. Yes, the Bureau of Labor Statistics. Yeah. But you would pull it up on the Fred. So anyway, so there was a mismatch. So you had lots of jobs for AI developers. So there's one worker and there's 8, okay? And there are 8 companies looking to hire somebody like that worker. 8 companies, 1 worker. So you have 8 jobs, but there's only 1 worker available. So this person's going to get a good opportunity. Then you look at the available workers, and let's say most of them are construction. Okay. Are they going to get an AI job? No, but there's lots of AI jobs available. So if, inflation stays high, mortgages do not come down, existing homes don't get sold because people will pay the higher price for a new home, but even then that slows. But then, so there's less work over there, but because mortgages are expensive and borrowing, so like a HELOC is expensive or putting stuff on your credit card's expensive. So for existing homes, you're not doing renovations. People were doing renovations when you could redo your kitchen and bathroom and pay 0% or something, right? And now it's 8. So now these workers, right, may be out of work and are available. So, you might look at NFP, right? Non-farm payrolls, the unemployment going up. Let's say the unemployment rate's going up, but none of those people are qualified for these jobs. And that's what we studied. So we went through history and data and subsets of JOLTS data. And we spent, I think it was 2 lectures just on JOLTS. And so as a senior economist at the Boston Fed, he loved JOLTS. So I can tell you JOLTS gets looked at by the Fed. At least the Boston Fed. Okay. So you could try starting here. Okay. And this gets you the same number that I just printed out for you. Okay. So we just pulled this up at TRADARS. And then you could look at you could look at maybe subcomponents. Or you pull up the actual press release and publication. So maybe this is the information that you want. Okay. Survey overview. Okay. Number of unemployed people per job. California. Whoa! They're actually doing poorly, huh? Washington. Whoa! Illinois. So California has 632,000 jobs open right now. And 1.2 people unemployed per job. Georgia has 300,000 jobs open. And significantly less unemployed people. Look at that, huh? So California has twice as many jobs as Georgia. But Georgia is a much smaller economy, huh? So that's why you can look at ratios. Jersey, not doing good, has less jobs open than Georgia. Michigan, yeah, less jobs open than Georgia and a higher unemployment rate. Amazing, huh? Oklahoma, oil. Yeah, South Dakota, North Dakota, oil. All right, so anyways, there you go. Maybe that was helpful, huh?
Canadian election polls narrow to nearly a dead heat.
So 7.74.
Australian dollar US dollar gains to near 0.6300.
That's about right.
Weakness in US dollar.
US dollar sinks to fresh 4-month low after German defense deal optimism. US major indices open lower. S&P below its 200-day moving average.
Oil prices rise despite lingering concerns over recession. Trump tariff plans.
Oil prices sink, back in sight of 3-war low on growth tariff risks. Nickel prices rise amid potential hike in Indonesian mining royalties. Sell-off alert. US dollar Canadian dollar hits resistance, eyeing support levels. Salvage crews head to scene of jet fuel tanker crash off UK. Euro US dollar refreshes 4-month high as greenback slumps on US slowdown fears.
JOLTS job openings January has come out. 774 ends.
Euro US dollar refreshes 4-month high as greenback slumps on US slowdown fears.
Holy smokes, huh? It's good, isn't it? So we were updated too. Isn't that cool? Yeah, very cool. So now we know oops, wrong one. Okay, now we know. And I'll give you this link. Isn't it nice that it's all right there on traders.com? So now you can read it to the person that asked questions. I think it was Evil, huh? There might be subcomponents in here that you might find. Now check this out. Number of job openings for December was revised down. Oops! They overcounted by 92,000 jobs. WWED. WWED. What would Elon do? You're fired. We overcounted by nearly 100,000. What? But anyways, check it out. So anyways, and the number of job hires, not the job report, ads, but how many were actually hired. Yeah, they dropped that by about 88,000. Oh my God. Okay. Now this is interesting because I'm starting to look. Burned! It's my buddy Bird. Yeah. Yeah. Cool. I'm starting to develop seasonality for news reports. Maybe it's something that I produce for traders.com. And then when you look at some of the reports based on annual revisions and adjustments, there are interesting things like what we just read here. And by the way, this is why you actually read the news, because they're telling you here January often has a low blip. And
US dollar slide resumes after brief pause. Scotiabank. Breaking above 1. Day moving average. Euro yen technical analysis.
JOLTS job openings 7.740 versus 7.630 Mounters estimate.
United States JOLTS job openings above expectations. 7.63 in January. Actual 7.74 mem.
Croatia trade deficit widens in January.
Okay, so in my preliminary analysis, I'm starting to see there are months in which you can, through quantitative analysis, predict, or let's say understand, or assume, or whatever you want to call it, anticipate, based on what has happened in the past. It does not predict future results, but having quantitatively looked at, let's say, every January JOLTS, going back years, you may find that there's a consistent result of downward revisions. And in particular in January, or some other month, whatever it is. But wouldn't it be neat to have seasonality in the economic data? Higher, lower, or as expected? Oh, see, as long as you have the data, you should be able to do the analysis. And so I'm playing around with that idea. And they're actually saying it here. Consistent with BLS practice, annual estimates are published for not seasonally adjusted data each year with January in the news, right? And then you may find that, bloop, okay, that they provide, that adjustment provides either an overestimation or an underestimation. Anyways. Annual average hire rate, 3.4, down from 3.8. So let's say the hiring per job is slowing, but still quite strong. The separations, which is the type of job relative to the type of worker, okay, is a little less bad. So the jobs that are coming out are probably the AI jobs. There used to be jobs going in, but maybe they're coming out. So the spread between the two, and that's what we were studying at Harvard, was the spread between the two. So the separation rate. And then the annual average rates, okay, for total separations, 2.1. Okay. So anyways, you can get in here. Now, Bernd is saying, okay, well, what about the jobs being advertised, okay, and the new hires, and the spread between the two? Can you go and get this for mining and logging? Yes. Well, what about bankers? Yes. What about teachers and nurses? Yes. What about government? Yes. Federal and local versus, right? Federal versus state and local. Yes, yes, yes. Well, there you go. And see, with TRADARS, you just click on it and there it is. What do you stink? Smell good, everybody? Yummy. Some of you probably have never done this before. Now you're like, hey, I think I can do this. And others may have done this from time to time, but it took a lot of time. So yeah, you were sort of on and off again. But now it takes so much less time because it's so easily accessible that maybe now you actually do the work that you're supposed to be doing. Yeah. Yeah, and that's a good thing in my humble opinion. Okay, so we were at 7.6 and what was the headline number? 7.74, so it's going up. And really, for headline data, that's not good. I think this was revised down though, so that's good, but the new headline is bad. Okay. And so greater than expected, when you go to the market section, okay, we've already recorded that it's greater than expected. We've removed the equal to, which was never there, so that was already removed. But remember how you could scroll? It was either going to be greater than or less than. Well, the less than has been removed. So it understands the news came out, removed all the stuff that's not useful to you. So now we only have greater than, and we have for only the pairs that offer some sort of reliable, repeatable pattern. Notice there's no euro dollar. So it doesn't matter. There's no reliable, repeatable trade. You might have volatility, but no reliable, repeatable pattern on the 2-hour or the 4-hour or the 12-hour or the 24-hour or the 48-hour. There's just no opportunity there that you should consider based on past performance. Now you're like, well, that doesn't predict future results. Yes. And you see something else going on. Good. But you can't rely on it as JOLTS doing it. All right, so then you're like, well, what about the other pairs? Okay, there's no real scalping opportunity. So you should just go back to doing what you were going to do anyways. Good to know. Okay, Euro, Aussie dollar up. I'm not interested. Aussie dollar down. That's not happening either. Pound dollar up, maybe. This one down, maybe. So you're like maybes, and you're like, show me the past. And we got some maybes here, even pops and drops. But the thing is, now you know. So we upgraded our community section. It's easier to navigate. Okay, here's all your navigation to the community section. Okay, here's all the upcoming webinars. So price action with David. David, do you want to keep this price action or do you want to change it to like a different name? Do you want to options trading with David Pegler? And focus it on option strategies? Let me know if you want to change it, although I'd have to change that, and that's not that easy. But let me know if that doesn't... Yeah, maybe that doesn't cover it. Or discuss it or describe it appropriately. But I'll show you in the, right? Well, I do a swing trading group, so that would be a threat to my swing trading group. Oh, you don't really? Okay. Although we could. I think in the future, David, we could. But anyways, one of the upgrades is this is a lot easier in the recording section. If you click that, it just automatically goes full screen. You hit play, and it's good to go. Less clicks. Okie dokie. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford. Yeah, that mic is not good when I'm... So anyways, that's a little easier. So that's been updated. Navigating is easier. Okay. So like, did you read Jessica's plan? Okay. Cool, right? Right? Links to a course. Isn't that nice? Thank you, Jessica. Okay. See, good stuff. Good. 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 So that's been upgraded, which is nice. And then also, if you missed, this is organized a little bit better too. So if you missed something earlier today, so like we're doing this one now, and then this one was earlier, this one was earlier, this one was earlier. That's all today. Scalping market opens, Fundamental analytics, scalping New York. Here's the one we're doing today. Isn't that cool? Oh, so cool. Okay, so anyways, that's in effect. Cool, right? Yeah, I know. You can't use full screen? No, yeah, it is full screen. I think so. Let me check. Maybe not.
Okie dokie. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad.
It's pretty close, but no, I guess not.
Results, please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let me pull up the TRADARS. Go.
So all they've done is embedded the pop-up. I get it. All right, that makes sense. So no, I guess not. Show all controls. There it is. Show all controls, then go full screen.
Go. No, I still can't see.
So it's an embedded pop-up, which is kind of funny. Yep, 89.89. Play. Oh, Kiwi. Wake up in the morning. Okay, it's good, right? Survival of the... Okay. So I'm not sure if this is 1080p. Does anybody know? This is different than the 1080p room. I would rather do it this way, but I don't think this is 1080p. Quickest, huh? You're the quick and the dead. But the 1080p has to be different, and that's in our... let me exit this. So I've implemented 1080p in our economics, right? Our fundamentals group. And the way that that works is you click on fundamental analytics. It takes you to our room. And we have uploaded recordings. So you got to go to the most recent recording, which is right here today. And this is 1080p. And so the idea is I'm going to implement this for the technical group.
520 and fake 400, 537.
This is what I'm trying to figure out. So, well, you know, I have a master's degree in... Oh, yeah, I won't tell you. So this is what we did today, right? So very similar to what we covered, except this was covered before the news. And then we did a deeper dive, of course, into, I don't know, the meaning of everything. So I'm going to move the technical stuff over here. And it's slightly different process, but the recording is higher. Okay. Cool. So I suppose we'll leave it there. Let me show you where to go next. YouTube.com/TRADARS. And there was a glitch on the server. Basically, I don't know if it was a glitch. The server didn't have an audio card because it's a server. So we've installed an audio card. And now we're running audio here. Not just the headlines, not just the calendar, not just the pattern recognition, but now also it'll read it out loud. If you're like, well, Wayne, it was reading it out loud, but when the machine behind me was doing it, then I had my laptop doing it. Yes, those also have audio cards, but I don't want to rely on my home internet, and I don't want it to rely on these machines. Like, for example, what if I want to use my laptop today, right? So anyway, so now I have a server. It only cost me $60 a month. And then we've had to install sound cards and stuff onto it. And so now it'll read the news out loud too. Because what would happen is it would read the news, but there's no sound. And so it couldn't broadcast the sound because there was no sound. So we have fixed that glitch. I don't know if it's a glitch, but it's a fix, you know? You just add more money. So I'm spending, $1,000 a month doing this for you, and I would like you to use it. Okay. And Derek BNLL Well Hell says he wants a dark theme. That is possible. I have the capability of making TRADARS all dark. All of it. The pattern recognition, the fundamentals, the market tools, the webinar rooms. It's just a little bit of work. But it can be done if everyone's like, if you prefer the dark theme, like what you see on the home page. If you prefer the dark theme and you're like, man, I want everything to be dark. I want it to look like that. I can do that. Yeah, well, the issue is the choice isn't that easy. I have the choice for this, but I can't do it for community. I can't do it for the fundamentals. Not yet. So it's more of the choice. I can do one or the other. Because, this is relying on multiple different types of technology. So, yeah, so this is running 24 hours a day, 7 days a week. So it's been running since March 5th. It's March 11th. Okay, so that's what I did, Burned. Is I put it on a server.
Pound sterling remains resilient against U.S. dollar amid fears of Trump tariffs-led U.S. slowdown.
U.S. dollar continuous slide after Trump doubles down on Canada car tariffs. Euro, U.S. dollar to push forward towards 1.12. Rabobank.
Yeah, it is on YouTube. This is YouTube, what you're looking at. It's been running for a week. And really, it'll run indefinitely. That's what this is. And I've made it as real time as I possibly can. The ticker's a little choppy because the server doesn't have a GPU. we've added the sound card, so now it has sound. I have not added a delay, but there is a slight delay because of latency in YouTube in general, but I haven't forced a delay on it to punish people. Okay? So it's as good as I can possibly get it with the limitations that the world has given us, and I'm giving it away for free. Real time is available inside of TRADARS. Okay? For those that want more of the community aspect, this is our new homepage.
Pound sterling remains resilient against you.
So now you guys can, members only can chat, and you see how much smoother everything is, clearer everything is, faster. There's no delay. It's all real time. That's because it is sitting on our this other server, and that's available to members only. And note, the chat is only available. And then this is, so now here's a different variation of the same page running on a different server, streaming on YouTube. So that's what's going on. But I haven't deliberately punished people for not being subscribers. Hey, I want everybody to have this. And some people pay $100 a month, $200 a month for a service like this. Well, it's my contribution to society. So here you go, everybody. So please use it. And while you're at it, click the thumbs up. Give it some love. Peace on earth. May the pips be with you. May our profits be above average. That just happened.